Yeah, I'm starting the recording now. You can guys participate. You can talk. I have enabled the sound on the recording so you can pick up your voice. Yeah, I'm gonna post this on my YouTube channel, which doesn't have a lot of viewers, but you guys can go back and review the notes and everything. I don't have any. I don't have the call. What I'm about to teach you guys in any format. I'm not. I'm not improvise this because Remy, one of our members, and it's for everyone that doesn't know, right? But he's interested in learning this, so I thought, why not just share it for everyone, which is like I said, a good thing to learn because we can spot actually good targets and whatnot on the charts, which is using fib extensions and fib retracements. So first of all, I'm gonna introduce myself. I'm Q. I run a VIP room here in LKS. As most of you guys know, we did great today. Just doing a little bit of recap of the trades that we did today. We were close runners on XBEV and LI, that from where they traced from yesterday. We took a firm calls at the right moment, close trim at the right time, and then yeah, that play went up for 115%. The SPY, we picked up the beginning of this push right here for 29 calls at 35 cents. I ended up trimming most of them at around 110%. And then right now, we did a second trim roughly at 200%. So, third trim actually. So, we're looking at this and trying to figure out how we came up with those targets. That spy play is a good example of why we did those favorite tracements and whatnot. So we're gonna use the futures chart for this. We're gonna pull up ES, a continuous contract, so we can be on the same page about the levels that we're looking at on the daily and whatnot, right? So if you were with me on Charts and Chat yesterday, you probably had the wrong bias for today because I did have it on charts and chat. But the thing is that I I tend to not swing. Is a very rare occasion I swing something, and it's because the whatever bias that you have to, I guess, change it or adapt it to whatever you see on pre-market, which is what happened today, right? A huge gap for today. We have a gap rolls on the VIP as well. That's another lesson for another day. But on the main thing about gap rolls is that if you don't go into the direction of the gap at the very beginning, like very first 15 minutes of the session aggressively, then you may not feel the gap. And you may trade in that direction of the gap. But also, one of the most important rules is that it may just chop around at a high range where it's not gonna go neither down or neither high up because most of the action has happened overnight. We missed that action, and we're stuck in a day like this, right? Where it's just gonna be a small range intraday, even though the daily candle is gonna be super large like this. So one of our trades today was basically we were picking up the 5 minute 20 MA, and I believe was also a favorite retracement. So I'll show you guys a little bit. Let's actually go to this chart right here. All right. So first of all, we do have a favorite tracement on the weekly. Now, the key part of our favorite tracements is how you anchor them, and it's more of a art than a science because it only takes like a little bit of visual aid, a little bit of your visual help on your eyes. Where does the where does where does the downtrend start to where does it end, right? So two ways to look at the favorite tracements. It's that you're gonna have uptrends and downtrends, right? Meaning this right here, this sequence of candles going lower is going to be our downtrend. This sequence of candles going higher is going to be our uptrend. So favorite tracements are to be anchored on, depending on if you're looking at a downtrend or an uptrend, depending on your outlook, on your bias and everything. So my bias right here is that this leg lower may hit some resistances on the way up and possible turnarounds at those points, right? So where can we find this? Where does the downtrend start? Just by looking at this. We have we have several places. You can arguably say that you can anchor your fibs right here. You can anchor your fibs right here, because if you notice, there was a dip and another lower high, and this is where it really starts. But then it ends right here, and then we have another lower high, and it continues back down. So I did use fib retracement from this high to this right here because it was the first leg lower, right? But once we cross the 65% retracement, I consider this a very high possibility of meeting this high right here once we cross this level. So my anchor right now instead goes for a very large one. If you are confused to either pick up this high or this other high, what you should be doing is going into an even larger time frame so you can get a very clear picture. Meaning, if I'm in the daily, I'm gonna go back to the weekly. So on the weekly, it's somebody mic is open. It's Remy. I don't know who's, but so on the weekly, it's very clear what the lower high happened. Right? It's right here. Right? It's just like if you were looking at a daily chart, but now in the weekly time frame, the same idea. There was a leg down right here, and then a lower high, and then a leg down. So the favorite retracements are to be anchored where the new downtrend started, which is right here. And where did it end? It is right here. So the lower end, it's where from where it starts to where it ends, right? So let's go down to the daily again, and you'll see that this is what we end up with. Now, that means that I'm gonna consider this. I know that whenever you first pull up a favorite retracement tool, it's gonna have like a various lines right here that's gonna cover this whole thing, right? One here, one here, one here, one here. So we only focus on three, and I have four, and I'll explain you why. We only focus on the 32, on the 50%, and the 618, and this is on a downtrend. We'll look at an example on the uptrend. Okay, we're looking at examples. So on a downtrend, if I'm looking at this, you got to think of it like the 50% is basically the midpoint from this low right here. So the way the market function is that if you are looking, let's say that you're a market participant and you're looking for this to sell areas, right? You got the opportunity to sell right here, but you missed it. And then you're basically like going to the supermarket or whatever, you find this good deal. You're at 50% of what just happened. You can pick up this new price right here. That's why it becomes the most common place for the market to turn around. 50% of what just happened ends up being a lot of the turnaround points. Now, a better deal than the 50% ends up being the 618. 618 ends up being a lot of the turnaround points for the market. And somebody's mic is open, Remy. So, so this is a very good place, another possible place for a turnaround point. Now, when you go above it, you bring the odds very, very high that you may hit the equal high that we have right here. I know there's more fib retracements in between, but they have way lesser odds of working. They can still reverse at any of the other points right here in between. What is it, like the 75%? I don't even remember, right? 78%, I think. But the odds, I mean, you're very high up and you're very, very close to the highs that it doesn't take much more to just get there. So you're just looking at the statistical approach. How does the market turn around? Where Usually at? So you can classify these three levels by kind of three categories. I'll give you the 32 retracements. We're gonna consider the strongest level. Doesn't mean that the word strong. It does not mean that it's once we hit this, we're gonna turn around to the downside. As you've seen right here, we did not, right? No, as a strong, it means like if it does reject and if it does turn around right there, it means that sellers are showing up into the market again at a very low price alert, very low discount. This is what they call a PD array, a price discount array, right? It's just a very, very cheap area to turn around at, and it happens, right? So I usually call it the strongest turnaround level, the 32 retracement, and this usually happens a lot on bull markets. So meaning that on a uptrend, So by flipping the fibs, and I'll show you whenever we find for a bull retracement, right? The next step, we're gonna call it the normal retracement. The 50%, that's the normal stuff. That's where the odds are 50-50, where the market can just flip from here down. And then the 618, we're gonna call it the best risk reward. And why is that? Because if we, let's say, if you think that the market's gonna turn around at some point, that this is only a dead cat bounce to then drop later. 618 is a very good risk reward because above it, you close it. The risk is low, but their reward is basically going all the way back down and making new lows, 10% extension and whatnot. But that's why we call it the best risk, which is a low risk and high reward. Low risk, high reward. Does that mean that it's gonna turn around right there? We don't know where it's gonna do it. You may take the 32, and if you end up holding all the way until the 618 breaks, what you're gonna do is basically have a high risk, low reward, or I mean decent reward, but like high risk, right? So what happens is that if you get closer to where this whole drop invalidates, the the lower your risk have on your trade. So I consider that the best area for entries on longs or shorts, right? It depends. I mean, if you're looking at a bull or a bearish perspective. Now, we do have a new area that I've been using for the last, I want to say, for a whole year already. And this is from a another trader that I saw using it, and it looked like, I myself was having a lot of issues for a time. A lot of the times I was taking the 618 rejections, and they were working beautifully. And the 618s were basically the my bread and butter for a while. But then I ended up finding out that I was getting stopped out just by a little poke of the 618, and then just going and then going my direction. And I was like, okay, does this not work
Question,
anymore? Go ahead.
question.
Go ahead.
So I don't know, the my chart's kind of unclear right now, but like when you draw the fibs, right? You talking about the getting the high and the low.
Yeah.
Is this a daily chart? Is this 1 day chart, right? 1 day chart, right?
Yeah. If you,
You're not looking at like multi-day. You're looking at 1 day, right? 1 day chart, and then you draw the fibs from the low to the high.
Yeah, whenever you see the whole move happening, low to highs, and you can see what time frame I'm in right here. It says daily, and yes, basically you can use fibs on all time frames. Just I
Okay.
think that's where you're going to. You can use your fibs on the 1 minute, on the 5 minutes, on the 15 minutes, on the hourly. You can use it anywhere where you can spot a trend. When you can spot the beginning and the end of the trend, you can anchor your fibs already there. But how many points are you looking for your trade? How much of the, depending on the time frame that you're looking for, how much of a time you want to spend on that trade. It all depends on you, right? It all depends on the time frame that you use. So, meaning, like, if I take a short right here, thinking that the 618 is going to be the rejection point of the market, I better, on the daily, I better have a outlook of multiple days on the chart, because I think that this is gonna top down and then it's gonna reject and then go back down and make new lows, right? But if I do this on the 5 minutes, then I'm looking for it to be a, I don't know, 20, 25 minute trade, right? Because it's gonna take, let's say, imagine this is 5 minute charts, right? It took 5, 10, 15, 20 minutes to make the push. What is gonna take another 20 minutes to make the drop? So it's, you have to get your like contracts accordingly, your points accordingly. You take it on a 5 minute push, you're gonna end up making 4 points, 5 points. You end up doing here on the daily. Let's say that you go and short this and you end up getting all your targets. You're looking at 100 points from here on ES, and that's a lot of money. But that's what I'm saying. It can be used on any time frames. Those, you don't have to constrict yourself at a certain time frame, but it has to. But you, depending on your time frame, you're gonna get your results, right? You do it on a weekly, it's gonna be even bigger points. But you just have to have the weekly patience, right? You take a 15-minute trade, you have to have 15-minute patience. You know.
Okay. Can I can I make a longer term trade using like a monthly chart then using
Yeah,
fib?
yeah. You
Okay.
can use it on the monthly as well, even the quarterly chart. So um, you can do it as well. You can do it as well, and we'll look at to see if we can find any. I mean, I have the perfect example. I remember picking up the cat, knowing what the lows were on NQ. Just gonna look at this on the weekly, or if you want to say monthly, maybe. Hold on. No, actually, yeah, monthly. Gonna look at the monthly chart on NQ. Gonna delete this, expand, and I'll show you a little example right here of the monthly chart. All right, we're gonna anchor the COVID lows into the all-time highs, and voila, 618 retracement ends up being the low of 2022. Right? Is it magic? No. It's just a very very good example, and I remember this precisely, right? Where the lows of the Qs are being the 618 of this whole push higher right here, right? And then we start the downtrend on 2022, and then we see the option from there on up, right? That's proof that you can use on anything, right? Monthlies, weeklies, dailies, 5 minutes. I don't go lower than 5 minutes, okay? But I've seen it that you can even see this on the 1 minute chart. But yes, does that answer your question, Remy? I hope it does. Moving on. So going back to ES, the ES example on the S&P 500 futures. The come on, did I delete the fibs? Oh, I think I did. Cool. So going back to this, doing a little bit of a recap right here. Oops. I'm gonna anchor my level right here. Come on, click it. Okay. So doing a little bit of the hold on, let me adjust this a little bit higher. Right here. I think that's the right anchor. Okay. So going back to over this, we have the three levels that I use. I mean, you can adopt this thing if you see a better edge using more levels or whatever you want. It's you do your own thing, right? But this is what I use. Now you're gonna see me adding a fourth one, which is a 6.5% retracement. To me, it seems like I was getting stopped out of the 618 a lot for a lot of times. Just like right here, you could have short the 618 and then being stopped out a little bit above and thinking, oh, it's gonna go to this high and end up rejecting right here. And why is that, right? A little, I think my theory is, because I really don't know, is that the market gets smarter, right? Algos get smarter. Algos cannot go and take out the 618 because it ends up being liquidity. A lot of traders do this, a lot of traders do that, and the market will go and do a little poke of that. And they ends up usually, after a lot of testing, testing, that means ends up the 6.5% retracement. And what do we see right here on the 5 minute chart? Look at this high right here. Very close, not precisely, but very close. And then placing a lower high up to the 6.5% retracement. It seems like the market is going accordingly to that, right? To that level. So I have this on my chart. I consider the 6.5% retracement. You know how I have names for the other ones? This one is the last point of return. The last call for alcohol. That's what I call it. You know how they stop selling alcohol at a certain time of the day, that you're rushing in to buy those to stack up before the party. I mean, before the party ends and before they stop selling alcohol. This is the last call for alcohol. So, um, yeah, the 40 right now that level is 42.32, 43.22.50, and we ended up topping out 2 ticks below it at 43.22. Eden Magic is normal market mechanics. So the this is an example of a bearish fib. Now we did use this information for a bullish trade. you know. So basically, what sometimes we look for is the analysis has to be done on the daily, but then you look for clues intraday. What is the market doing? Where can it head to? So, or just to give you an example, or a spy trade right here came out of a anchor in the fibs from lows to highs. All right. So as you notice right here, this push right here that it had, you can clearly see on the 5 minutes that the market made a leg up right here, made another leg down right here, and it started making a leg up right here. Now, I this is a combination of a lot of things. Not only favorite tracements take place on a trade thesis for myself, right? I look at different things, but I look for confluence. So I'm just gonna stick to what the fibs are doing because the that's the lesson of today, right? So the what do we have here is a clear push higher, and this is the low. How do you know this is the low? Only after this candle and possibly after this candle. That's when you can start. I'm sorry, the move right here that happens. Because if this candle push higher and this candle started pushing lower, so there's no magic that ended up being at the 6.5% retracement. The push. This is an example of the long-sided fib retracements. If you notice, I anchor from the lows to the highs instead of the highs to the lows because now we're looking at a push higher, right? So this is the like in the opposite end. The I'm gonna color code these other ones for another color just so we can see them. All right. So we're gonna focus on the yellow ones, right? Because they're the push higher like this. So this is a good place for picking up long, and I consider another touch of it a possible long entry. Another combination of this trade was the 5 minute 20 MA, and the fact that I was looking at this day within the gap rolls that we may head in direction of the gap because the first 15-20 minutes of the trade did not go aggressively to fill the gap, right? So what I'm looking for is higher prices, and where can I aim those higher prices for? So based on the daily analysis, we have a level right here at the 618, and we have a level at the 65. So we ended up going long here, ended up trimming right here. In hindsight, I shouldn't have because we went higher. In hindsight, we don't know if this is going to be a rejection point. Yes, can I take shorts there? Possibly. But I think using the gap rolls, I tend to believe that we may not drop today at all. That we're gonna go even higher, I don't think so neither. So I'm just gonna take the whatever I can get early on the session and call it a day, right? So then this was our entry, there was a trim, and this was the other trim right here. And I ended up trimming another. I'm sorry, I did three trims. I'm sorry, this, and this right here, and this is the other part of the lesson, which is the extensions. If you see, this is a negative sign right here. As I have it as extensions, and I'll show you in a little bit why. So this trade worked beautifully, and you see the power of the favorite retracement. You see where it bounces. I know this one dipped below a little bit, but I think you want to go for candle closes, right? So if the candle closed below, then you can call it invalid. It's straightforward, right? It doesn't have to just poke below. You can wait for a close, at least on a 5 minute time frame, and then start calling it invalid. If it's not invalid, keeps going higher, held the 5 minute 20, and then we hit our all of our targets right there. The if you notice you notice the difference, right? Whenever we do I'm just gonna put the two on the charts. Whenever we do a retracement, I'm not gonna anchor it at a place on the chart. I'm just gonna put it right here. I'm just gonna put it right here. Whenever you do a retracement to the upside, you're gonna get the bottom of the trend that you're looking for, and then you're gonna anchor at the highs of the trend that you're looking at. Okay. And then you're gonna be looking at you'll see the 32 retracement is gonna be higher, right? So it's gonna be going back down to here is basically the same idea, right? Is the strongest one, meaning like if the market does bounce at the 32, It's gonna have you can count that it's gonna go for it's not gonna stop at the highs right here. It's not gonna stop at the 10% extension. It may go even higher because the buyers are showing up at a very shallow retracement. Going to the 50% is normal business and then bounce. 618, the best risk reward, and then bounce. Now that's the bull one, right? The bear one, you want to get it from the highs of the trend into the lower end of the trend. Oops. Let me move it down a little bit. Okay. You notice, right? You can even see on the little dash line right here going up and then the other one going down. So the same idea, the 32 is going to be the closest level, going back up, possibly rejection to then go lower, if not the 50%, if not the 618, right? So same idea, right? If you were looking at a mirror. The most important thing is where you're going to anchor this. Use your eyes, use your criteria, use your analysis, everything to where you're going to anchor those fibs. Okay. Any questions? I hope this is not a lot of information. Any questions? It's like I said, doing a little recap.
Okay.
Usable on all time frames. Go ahead. Go ahead, Remy.
So, how do you? Number one is how do you know when the move is finished or not? That's
Well,
what I'm confused about.
the usually by having some candles that indicate that already. So basically, let's use the daily example. Let's use the daily example. I know that this is a high because it's been coming down, right? This has been coming down. Like it's where is the end of it, right? Where is the end of it? So you can arguably say that at this point, you can actually there's a trade right here. If you notice, anchoring the fibs on the daily from this last lower high into this into here, you'll notice that it's very close to the 32 retracement right here. But you can arguably say that this candle already was a reason to anchor your fibs right there. Now, you could have been faked out thinking that it's already an anchor just because it's already a green candle, which it's the first thing that you want to be looking at for a possible anchor. The second one is basically a two candle continuation of the bounce. So up to this point, right here, you know, this candle setup, meaning like we made the downtrend. We have the first candle that closed up at the highs right here, actually at the highs. And the next candle closes up at the highs. You already know from this three candle setup that we started in an uptrend right here. So at this point, it's safe to say that you should already be anchoring your fibs to the low of the trend, which is this. Does it make sense? I hope that makes sense. You know that the top of the anchor is very easy, right? Because you don't know that it was a leg down until it's already been coming down and breaking lower lows, and it's already been trending lower, right? But the bottom of the on a bear retracement, you have to wait for the candles to show that it's already reversing. Okay, you have to wait for that. You can preemptively go and anchor your fibs before it happens, but you're gonna be running to the problem that it may just be a little bounce and then continue lower. Where do you know? Like forget about this price action right here. I'd like somebody to participate on this. Where do you know here that the downtrend has ended? From starting from this leg lower. Actually, let's go to the weekly. Let's go to the weekly so we can see a little bit better. All right. All right. Let's use this as an example right here. Let's use this area right here as an example. Oops, come on. Right here, this area. Come on, draw it. All right, there you go. All right. Ah, come on. TOS. Don't do this to me. All right. So we're gonna use this area. So we know that the downtrend started, but how do we know when did it end, right? I like to use some live examples for this, but I don't. We will have to sit on the chart for a long time to find one live. But you know that they're starting a downtrend because of this couple of candles right here. This uptrend right here ended when this candle engulfed two actions right here on the weekly, and then we started a downtrend. Where does the downtrend? So you already know that you have your anchor right here at the highs. That's easy to tell, right? That's very easy to tell. How do you anchor the lows? How do you know that this is the low? If anybody can answer that question, how do you know that this is the low? Not because in hindsight, how do you know that this is the low? Okay, so I'm just gonna I'm just gonna ignore the fact that nobody answered. But how do you know? Is because you already have a green candle to start with, the very first one, green candles to start with. Whereas just the other candle tells you that is the other one right here, this green one, right? Confirms that the downtrend ended right here. So on that sense, this new, I guess this is a live example on the weekly. We know that the lower high was set right here, and we know that that this candle, if it closes like this on the weekly, we know that the downtrend has ended from here to here, and then you can start anchoring your fibs right here on the weekly, using the weekly, using the daily. You can go a little bit. You can go and tell that the anchor was at that low because of the couple of candles that did this bounce right here. So this basically this setup right here, right? This setup. You got the lows, you have a candle that closes above the highs, and then you have the next candle closing right here. So it is, I don't know if it makes sense. I hope it's not gibberish because I know that when I was learning a lot of stuff, it did not make sense. It did not click at the beginning until I saw it frequently, listened to it frequently, and then one day you have like an epiphany, right? Like oh shit, it makes sense. It makes sense, Like I now understand. It's just gonna take you a lot of practice to get to that point. But okay. Um, so we're still having that rejection at the same area, so and a lower high. I may think of it short, but I really don't want to mess up on a already good day, guys. But you can see what's happening right there. You would have taken the risk to short right here with a stop about the 6.5% retracement, you'll be golden right now, right? You'll be golden right now. Um, so does that answer your question? I'll give you a little example on the 5 minute one. I know it's only a one leg lower, but you know that this was a downtrend. You know that the uptrend it's the uptrend, the downtrend had ended with this candle. First sign, the second sign is the second candle, and then you can start getting like a short scalp at the 6.5% retracement, and boom into the 10% extension. So this is usable in all time frames, in all directions, whoever you want.
Can you explain your 20-day, or no, is it 20 EMA or something like that? The stuff you love. Explain it to me. Like I'm 5.
Well, it's getting outside the lesson for the fib retracement, but just to give you a quick one, it's basically the market is not gonna go up and down on one direction, right? It's gonna take breathers, it's gonna retrace and all this stuff, right? And the 20 MA tends to be a lot of the times the mean reversion. Let it be on the 5 minutes, 15 minutes, 20, and the 1 hour on the daily, on the weekly. It's just mean reversion, right? Especially, sorry, especially on the daily, because how many trading days do you have on the month?
20.
That's right, Remy, 20. So that's why we use it a lot. And so there's that, and also the basically what you can call a trade at the 20 MA, you can call it compression. So the market's all about inhaling and exhaling, right? Is that what the right word is? Basically, compressing and expanding. And I'm doing some hand fucking. If you could see my hands, where the market compresses into the 20s and into the 20 moving average and expands, like here, right? Compress and then expand, compress, expand, compress, expand. So compressions are basically returning into the mean reversion and then expanding out. Okay, so that's why we love this stuff. That's why we use it a lot. In confluence with the fibs and everything. So I'm gonna dive now into the second part of the fib retracements. So we're gonna talk now about the fib extensions. So I'm just gonna go to a clean area right here so we can talk about it. So right here, we're gonna use the first bull retracement, right? So on a uptrend, you got your fibs, you got your anchors, you figure out your lows, you figure out your highs, you know your levels, you got your bounds, you got the entries, right? Uh, where does it go next, right? So if the market manages to go and oh my god, is the market going up again, or why is this chart moving? Hold on, this chart's moving and it's letting me look at this stuff. Okay, so the so basically, where can it go to? So statistically speaking, most new highs made tend to fail, right? Does not mean that the trend will stop going up from a certain point, right? But a new high, and especially a poke of a new high, ends up being a liquidity grab, right? So what does the what does that represent, right? So I after many times studying this and many times looking at how far does something go to, I ended up coming up with a 10% move. So this 10% extension that you see right here is basically, if you extrapolate this little area right here, I know it's obvious, but just to clarify it, this little area right here, 10%, and you multiply it 10 times, you're gonna get your whole range that just happened right here, right? For the last leg higher. So a lot of the times, new highs tend to fail. They end up going into the 10% of the previous move and then reverse back down. A lot of them. Most of the highs on the market tend to fail. Does that mean that it's gonna go down from here to the depths of hell, right? It tends to fail, not hold up, then pull back into a new retracement, so for a higher low, and then go back up. Another 10% extension, back down, and then a 10% extension, back down, and then what you have is basically a trend higher, right? So a lot of the times it ends up being right here. Can it go even higher? Yes. And that's when you bring the odds to see if they're in your favor. So there's more retracements to go for. There's the 38.2, there's the 61A extensions, I'm sorry. But I usually go from just looking at this couple of points, because from here and here there's a lot of difference on points, and I'm not saying that, oh, once you cross the 10% extension you're gonna hold all the way to the 50. But you can reject anywhere. I just use it as a visual aid for myself for whenever we're hitting those levels, right? And what you have right here is basically like, if you know, a good normal market will do a push, 50% pullback, another push, 50% extension, into a 50% pullback. And what you have when you do that is basically like, let's say a push. I'm sorry. I'm just gonna draw some lines right here, right? So a push like this, a pullback into a 50, into 10% extension, for another, you're gonna anchor your fibs into the new move, right? 50% extension, you're gonna anchor your fibs, You're gonna start realizing, oh, it's topping out right there, it's pulling back, we're hitting the 50% extension. You're gonna use your new fibs like this. And when you end that gonna have right here is another rejection into a 50% pullback into a 50% extension. And I'm gonna delete the fib so you guys can see it. What you have right here is basically a break and retest, right? You have your previous high that you set. You're gonna have your previous and what was resistance is now support, and what you have is basically a trend, right? A push, 50% pullback, 50% extension, 50% pullback, 50% extension, and so on, and then you keep your trend upright like that. So that's a way of following the trend right there. The does that make sense, guys? Is that clear?
Yeah.
Okay, so basically that's what we have. The market is not gonna give it that easy, okay? Not gonna give that easy, but that will be ideal. That's all ideal moves and everything. So, and in the same vein, I mean, you just have to think of it on backwards, I guess. On the leg lowards, it's the same, right? Pull down 50%, 50%, 50%, 50%, and so on. Now, you gotta think of this. Oops, sorry. You gotta think of this fibs. Where are you? Oh, I'm sorry. Hold on. Okay. Right here. Oops. Okay, so you gotta think of this as the odds of every level, right? Every level, the strength, the energy. So going back to the bull fib retracement example, right? The full bull fib retracement. Think of it, the push that it made up to here, us as of energy. It takes that many buyers, boom, 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 and that many buying of orders to push the move higher, 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 and then it's gonna run out of energy, so it has to pull back to reset that energy and then push higher. Now, is thinking that on ideal market conditions, the same leg higher, is gonna I'm sorry, the very same leg higher is gonna retain the same energy to the upside. Depending on where the pullback is going into, the higher the odds, the higher the pullback is, the higher the odds are we gonna make an even higher high, or that we're gonna hold the high. So why we call the 32 retracement the strongest one is because the odds, keeping the same idea of right here of making it above the 50% extension are greatly, right, from this point, using the theory that will be the same energy from this point, right? So you're gonna the higher the shallow the pullback is, I'm sorry, and yeah, the higher it is, the greater the chances that we're gonna hit higher, thinking that it's gonna have the same energy, which is not the case most of the time, right? Thinking it's gonna have the same energy. Now this one's there's a particular there's a characteristic about the 618, because 50% ends up being normal market conditions. You tend to meet this high or even make a 10% extension from this point, but the 618 has very low chances of meeting this high right here again. So if you pull back into a 618, the odds are not that high that this high will be met, or that this 10% extension, or that the 10% extension could be the highest point of the move. Because it's just gonna require a lot of buyers to going back up to this price again. So the odds are stacked up that this move, if you're coming in from a 618, may only do a little poke off of this high, or may only meet this high and then do a double top, right? So You have to keep your expectation that yeah, I got the best risk reward, but the odds of me meeting that reward are not that high. Okay? Does that make sense? Or any questions, guys? I'm gonna assume that I'm being very clear as water, and you guys are very smart, and this is going um, through your brain like a hot knife on butter. That is just we're just hitting. We're just hitting the right spots, and we're going in. We are understanding this very well. Now, I think, I mean, if you guys want to follow the same ideas that I do, open your fib tools. Like if you're using TOS, you draw the fib, you right click on it, you go to edit properties right here, and then over here you can unclick the ones that you don't want to show. You can add new ones on here and add curve, and then go ahead and add the extensions right here. You can set the colors to be different because I believe it. I don't know what color. I think it come out as red, and I don't. It confuses with everything else. I like this color for my fibs, and yeah, and then you click right here once you're ready. Click right here to save as default. Then this is the same fib that you're gonna be drawing all the time. Cage House says, how much time do you give the 618 before it becomes invalid? It's not about time, it's about the price. You know, I do understand that your best trades are whenever you buy that 618 and it bounces immediately, right? You buy that it comes back down. You buy that 618 and it goes up rapidly. Ooh, that's money, right? Like zero pain, zero nervousness. It's just a straight up from there. Those are the perfect entries. Those are the best. But in reality, a lot of the times it may take longer. And in fact, like if you let's say for example, live example right here. You short the 618 right here, the 6.5 around the 6.5% retracement. You go short, and then you start seeing working, but then you don't see it work, and then you start seeing working, and you don't see it work. You're gonna start doubting about the trade, right? But you're forgetting one thing right here. If you're looking at the anchor of what you did right here, is that you're doing it on the daily. So your trade has to have daily patience, right? Daily patience, and it only becomes invalid not by time, but if you trade above it. That's it. And I have to combine this with other stuff. Like, what if this is a fair value gap right here on ES? From this high to the current high right here, we have a fair value gap. It fails completely when it goes all the way to 43.30, 43.30, I believe. Yeah, 43.30.75 is the lows of this candle. So it may not reject the 6.5. It may go back to that level, fill the fair value gap, and then reject. Okay, so it so it just might be another reason for the turnaround. But the fib, if you're just focusing on the fib, only on the fib, it becomes invalid once you trade above it, no matter how long it took. Right? So some trades are done for options, some trades are for futures. So it all depends, right? It all depends. A 5-minute favorite retracement should work faster, right? Should not spend that long on that area, right? Does that answer your question? All right. Thank you, sir. Thank you. Let's actually open this section now that we covered the bull fit and bear fit retracements plus extensions. Let's talk about let's open this section for Q&A. So be participative, or we just end the lesson. right here and there.
So what's your star sign? Are you a Leo?
No, not that kind of question. Questions about the favorite tracements and extensions, sir. I just seen the comments that it was blurry. I hope it fixes
Discord's always kind of blurry. That's why I always wait
for the
um
YouTube.
for YouTube, because then Discord always blurs in and out, and like we have, even if you have Nitro or whatever, it's just horrible streaming quality. Like that's why I think a lot of people started streaming on Twitter and YouTube instead. And I don't know if it's okay, but maybe next time for your lessons or Discover, you could move it from Discord to YouTube and just try to stream from YouTube or something. That'd be probably best. The quality of Discord is just going down worse and worse.
Yeah, that's right. That's right. So I'm gonna give you guys my YouTube channel. If you guys can give me a follow, hopefully next lessons are gonna be on. We're also gonna do it right there. I'll upload this recording. I'm gonna stop the recording right here. There's not a lot of questions. Um,
Thank you for the lesson. I'm gonna have to rewatch it later on YouTube because stuff was cutting in and out, but it was good.